No matter what sort of pandemonium is going on in the market, the mad lads over at WallStreetBets never fail to present a clear and present danger to themselves and those around them. With this spring introducing such exciting events as 3 major banks getting curb stomped, a certain towel company finally declaring bankruptcy, and the first bona fide recession in 15 years, there is no shortage of mayhem on our favorite sub. Fellow degenerates, it is my honor to present the most sick-nasty trades of WallStreetBets. First up into the box is user Suddenly Abalone 4966, a longtime crypto and OnlyFans enthusiast who recently pivoted to equities and options. As a relative newcomer to the gambling den we call WallStreetBets, Abalone was highly susceptible to peer pressure in early 2023, but after a short stint observing other people making money off janky DD, our man decided he was capable of doing his own equally dubious stock research. It was time to take his piece of the pie. In early February, Abalone observed that Pepsi stock trades highly cyclically. When Pepsi was trading for about $170, our man believed it would spike prior to earnings and then subsequently come back down, just as it had done each earnings season for several years. Admittedly, this is better DD than most people, and the big baloney went all in on calls at the $185 strike, expiring a responsible 30 days out. His gambit did pay off in this initial maneuver. His first evident trade on WallStreetBets netted the shellfish a cool $4,700, a 27% gain to about $22,000. But this was just the tip of the iceberg. Abalone's account hit $25,000 at the end of February, but the big man was not nearly satisfied. To really get that portfolio juicing, he decided he needed something a little more volatile than Pepsi. Something like Tesla. With no further DD evident, Abalone plopped his entire account down on Tesla calls expiring on March 3rd, approximately 1 week out. He took a small position with at-the-money strikes and a much larger position, about 4% out of the money. His expectation was that Elon was due to print some big news for the EV squad, but the days ticked by. Elon Musk was inexplicably silent. Expiration approached, and ultimately the muskrat left the boys high and dry. By the time he cashed out his L, Abalone had taken well over 90% losses and was left with $3,000 of cash and some detritus from his nearly worthless calls. His Robinhood account was fried. Luckily for Abalone, his Webull account had about $10,000 in it. If he were going to get his money back, Webull would need to carry him to victory. According to the man himself, Abalone did extensive DD over several hours and determined that cybersecurity company Zscaler would rise substantially after its earnings report the following day. In fact, he was so confident that this moonshot was coming that he put his entire $10,000 balance on calls expiring after market close on earnings day. When CEO Jay Chaudhry took the mic to announce earnings, the company did throw out some impressive stats, but investors were unimpressed. By the time the call was over, the stock was already slipping hard. Abalone refused to release his grip and diamond-handed his calls into nothing. By the day's end, his Webull portfolio was insolvent. Between multiple accounts, he had blown himself up from a peak at $65,000 to just $3,000 left on Robinhood in the span of 2 weeks. Some Redditors recommended he seek help for his gambling addiction, but suddenly Abalone assures us he's got it under control. That's what they all say, my friend. See you Monday. Now, let's dive into sick-nasty trade number 4. Next up into the pocket is Math Guy 100, a guy who spends way too much time on Reddit, but has close to zero investing skills. In other words, a pretty typical guy. During the 2021 GameStop squeeze that put WallStreetBets on the international radar, many scrubs off the street waltzed into the new year thinking they were master investors. Short squeeze became another phrase for stock rising. Every green candle was regarded as a short squeeze, and 100 pump and dump stocks sprouted communities of bag holders thinking that their stock was the next GME. Math Guy 100, despite his calculus background, is among them. As a card-carrying nerd, he was familiar with the computer equipment website Newegg for many years. When the online retailer hit a brief high of $79 on a weird bubble moonshot in 2021, an armada of apes piled in, only to be dragged down back to the single digits over subsequent months. Most chimps moved on to the next pump and dump, but Math Guy stayed behind, convinced that the massive decline was just an attack by short sellers seeking to shake out the troops. For the next year, the math nerd posted or commented almost daily on how the short squeeze was imminent. But by January of 2023, even he was exhausted. our homie exited with an unspecified loss and moved it over to the greener pastures of WallStreetBets options trading. He initially dove into another former pump and dump called Mullen Automotive, but was quickly sussed out for a small loss. To get back in the game, our man took his $3,000 portfolio and entrusted it to Elon Musk and the Rat Boys. In late January, Math Nerd went all in on Tesla calls at the $250 strike expiring in a month. At the time, Tesla was trading just below $144, putting his options over 60% out of the money. But within a couple weeks, Tesla self-yeeted to almost $200, putting his calls up over 250%. Our man's portfolio now sat at over 10K. But the young king was not complete. He patiently reassessed and elected in mid-March to go all the way back in on 84 calls at the same $250 strike expiring in late April. But when the WallStreetBets peons told him that the position was ass, he flipped some unspecified SPY options to make about $4,000 more, and then put the whole pot right back on the same Tesla position he had before. He was subject to ridicule, but the criticism only fueled the big shot's ego when Tesla rallied hard to $207 at the end of May. The nerd gone wild made over 21 grand in one day, and his portfolio crested 35,000. I wish the story ended there, but alas, we know how this goes. When the market decided that 93% year-to-date gains was adequate, the stock floundered and IV got crushed. The nerd's huge gain transcribed to a $13,000 loss 3 days later. Initially, he stayed resolute, believing that this was only a temporary dip. But within 24 hours by April 4th, he took his L and decided to announce to his fans that he would flip over to SPY calls. He went all in with his remaining $15,000 balance on 157 out-of-the-money calls expiring at the end of the week. A bold and reckless move. By the following morning, he paid the price. SPY dipped and he was down another $11,000, leaving him with a meager $2,500 to his name. In his words, Icarus flew too close to the sun. These days, Math Guy is back on the Newegg Squeeze subreddits, praying for a short squeeze that will bring him back to his glory days. A short squeeze that will never come. Keep working on those math skills, buddy. Now, let's check out SICKNASTY trade number 3. Our next wild boy is a private character with a throwaway account by the name of John Lee 2023. As a throwaway, we regrettably cannot penetrate deeply into this guy's personal history. However, John Lee did share that he recently exited a startup company in 2022 with a payout that appears somewhere close to $1 million. A satisfactory sum that inspires people to reasonably invest in blended income and growth instruments. Unless you're a degenerate WallStreetBets gambler with Reddit karma to earn. John Lee consulted himself in the mirror while drunk and determined that he should risk approximately half of his net worth on high-caliber, low-octane stock options and seek obscene gains. And as everyone knows, when trading aggressively, only a coward keeps his trades small. John Lee dumped 416 grand into a Robinhood account and rapidly zipped in and out of calls and puts. For those who want a rush without drug use, this is an effective strategy, but for guys like John Lee with precisely zero precision, this is a great way to precipitously lose net worth. In what appears to be only a few months, the tech bro shot in and out of positions, losing money almost every single time. A straight cascade looking like Angel Falls from over $400K to about $600 in one disturbing motion. Typically, when someone loses money like this, we at least see a few wins along the way. But there are exactly 0 redeeming trades in this waterfall. John Lee traded so often that he turned over his account about 28 times in this short span, trading over $11 million in proceeds. And he's got a cool $1.3 million in wash sales that will pay it forward. Dunk on him all you want to, but you don't have 450 years of tax deductions to look forward to. Congratulations on trading like complete ass, John Lee. Now let's move on to SICKNASTY trade number 2. Next up in the hot seat is user DBO199523, a certifiable gambling addict with very little concept of risk management, so another typical WallStreetBets user. He appears to have joined our beloved subreddit in the spring of 2020 after making some big gains on Home Depot calls. Debo subsequently managed to lose $32,000 in a single day 2 weeks later. Then, things got worse in June when REITs, memes, Boeing, and JPOW all donkey punched him at the same time. Between May and June, the big man suffered a $65,000 swing that left him in an $18,000 margin call with Robinhood. But that taste of initial success with Home Depot ignited an insatiable craving in our degenerate friend. He was hooked. In a pro-gamer move, Debo deleted the Robinhood app and moved things over to Interactive Brokers for a fresh start. Over the next 3 years, he indeed got plenty of fresh starts. A self-proclaimed zero-day to expiration gang trader for life, our man's swings are wild. 10xing a $3,000 trade in a few hours was a relatively common phenomenon for Debo. To his credit, he does appear to have cashed out incremental gains, but invariably, his luck ran out, sending the better part of his portfolio back to earth once again. Until his week of reckoning came in early March 2023. On Thursday, March 9th, Debo was deep into a week of consistently losing money on puts. For 4 straight days, our man habitually bet that SPY would tank and lost money each time. But unsussed, the gambler sustained his belief that the market could not sustain prices above SPY 400 and took his last $7,000 to bet on a market dump one more time. For his sustained volition, Debo was rewarded. SPY completely tanked later in the afternoon, turning his 7K into 90,000 in 4 hours. The hotshot cashed out, withdrew 40K, and spent his wheat huffing snow and kerosene off a stripper's ass. But he wasn't even close to done. The following Monday, he saw that SPY had dipped substantially and was due to reverse course. With a modest $12,000, Debo went back in on SPY calls at the 385 and 390 strikes, expiring that day. He took a shower, ate breakfast, and then checked his phone an hour later to observe that SPY had yeeted itself back to 389. Debo took a $50,000 gain in a single hour. But the show was still not over. That Wednesday, the man with the hot hand has observed SPY once again. He believed that the market was due to recover further and dipped his toes into 200 call contracts at the 390 strike. Of course, those contracts expired the same day. But throughout the day, SPY showed no intention of mooning. The market languished, and Theta slowly nibbled away at Debo's calls. He was forced to double down, then triple down, then quadruple down, as Theta Decay ate him from the inside out. By 1 p.m., Debo had 1,000 out-of-the-money SPY calls, all getting dusted. In a final leap of faith with reckless abandon, the mad lad dumped his entire portfolio, all $120,000 worth, into yet more out-of-the-money SPY calls at the 387 strike. If the trade failed, the Phenom would be back to nothing, forced to toil in the earth as he bore the stain of gambling addiction. But the WallStreetBets deities had other plans. In a miraculous turnaround, SPY decided at 2:30 p.m. that it was time to rocket. The market shot up to SPY 389. In an unbelievable twist, Debo the Great's portfolio self-yeeted another 165K, and his account sat at a massive 280,000. A massive W for a man with massive balls. Congratulations on the huge gains, Debo, and everyone remember, results not typical. Now, the moment we waited for, our most sick nasty trader. On March 19th, author Mark Manson released a hard-hitting YouTube video that professed convincing DD on how to be more successful than 99% of other people. 1. You must have a contrarian idea. 2. You must be correct in your contrarian idea. And 3. You must execute hard on your contrarian idea. His DD is exceptional, but he forgot point number 4. Don't be a fucking idiot immediately after succeeding in points 1 through 3. That should go without saying, but evidently it does not. I introduced Josh Bone 12, a highly regarded PhD in quantitative finance. As a trader who appears to get all of his financial advice from Reddit, Josh is the epitome of WallStreetBets. To give you a sample of his trading career, our man inherited approximately $300,000 from an unspecified dead relative in June 2022. He initially intended to purchase a wide range of tech stocks, but ultimately settled on leveraged ETF TQQQ, believing it to be lower risk. He elected to also drop a portion into Bed Bath & Beyond, losing about 50K by August 31st. And just to make sure everyone knows how much of a brat this guy is, I'm gonna leave this screenshot of his grievance on screen for a little while. This looks like a shitpost, but he's 100% serious. He blames WallStreetBets traders for convincing him to buy Bed Bath & Beyond stock in anticipation of a short squeeze. He says that other traders posted DD that deceived him into buying, and blames bystanders for not stopping this deception. He compares the situation to the Holocaust, in which bystanders failed to prevent atrocities. He also bought deep out of the money puts on Carvana earnings and lost money to IV Crush even though the stock price dropped. He did not understand Theta, and so believed that Webull had committed fraud when the price of his puts dropped, and so complained to the SEC. Again, this looks like a shitpost, but this guy is just a true spoiled regard. Nonetheless, Josh stuck around and traded on a slow downward decline until mid-April, when he assessed that regional bank failure contagion was no longer a risk. He began with a modest bet that JP Morgan would lead the banking recovery. Although his reasoning was pretty off the mark, JPM still popped off and netted our homie $20,000 in gains. Still, Joshua revised his outlook at some point shortly thereafter and was indeed convinced that regional banks would continue collapsing. On April 26th, he put his money where his mouth is and dropped almost $100,000 on at-the-money puts on First Republic Bank, expiring in 2 days. Analysts from Bloomberg to Reddit were all convinced that FRC was about to get demolished, and Josh needed FRC to get obliterated in the next 3 days, or his portfolio would get Thanos'd. Within an hour of opening his position, FRC had shot up over 10%, and Josh's puts were down about $53,000 for a loss of 50%. But fearlessly, the PhD tripled down, replenishing his bear ammo with another 520 at-the-money puts. He was now armed with 1,370 puts, ready to drive nails into FRC's coffin. But the maneuver was costly. The zombie bank continued to rise throughout the afternoon, and Josh was approaching another $60,000 loss. He paper-handed the weekly positions exactly 30 minutes before FRC precipitously tanked, and he watched, barefoot and hopeless, as the stock dropped without him. Josh's FOMO began to manifest, but the big man had some paper left on the sidelines, his life savings, and he dumped it all into another 320 at-the-money and out-of-the-money puts expiring on May 5th, unable to cope with the thought of missing out. And when FRC continued its bear fiesta into the following day, the wild child was vindicated. Most of his losses were negated when his puts shot up in value, giving him an over $75,000 gain. WallStreetBets users, including Kanye West, advised him to cash out bigly. If the ticker were halted, he'd be bag holding a huge gain, unable to realize it. But Josh refused to heed the warnings, and instead planned to hold until the stock was deemed worthless, at which point he'd execute his puts and force his counterparty to buy valueless shares. And then things just get funny. Josh was so engrossed with gains that he refused to cash out until he won the whole pot. However, when FRC got delisted, Robinhood would not let him execute since there was no stock to sell. To say that Josh got litigious would be an understatement. In early May, Josh posted enraged. He declared Robinhood a den of jackals and threatened to sue for almost $300,000 if he was unable to execute his puts. He posted evidence of what he believed was infallible proof that Robinhood support promised him he would be able to execute. But in this 1:30 a.m. conversation, the customer rep just says that he'd be in a tough spot to exit the position and makes no promises. Josh was deluded, and in his follow-up conversation in which the rep said, "I don't know what will happen to your puts," Josh took it as further evidence that Robinhood promised him something that they did not. He consulted a lawyer who appeared content to get paid in exchange for taking the case. He also entered the bargaining stage of grief and asked that the wider base of Robinhood users advocate on his behalf. His effort was for naught. We can tell the grief began to overcome his optimism, because for probably the first time in his life, Josh stopped acting like an entitled baby and apologized and begged for help. After some unhinged ranting, Josh bargained that he would make a $10,000 donation to the Autism Society of America if Robinhood allowed him to seize his gain. The masses on WallStreetBets relished in his suffering. It was satisfying to watch this obnoxious imp squirm. With any luck, he'd learn the value of personal responsibility, instead of comparing Reddit users to Holocaust bystanders. But the day after, it appeared JB was back to his old antics, declaring that he'd, quote, won after being told that he may be able to cash out. Again, not understanding the words may versus will. But fortunately for him, Robinhood did reinstate trading on FRCB, the company's new ticker, allowing Josh the liquidity to close. He did not exercise his puts, but rather sold them for a $156,000 gain. After factoring in the prior losses on his other FRC puts, the gain is still around $100,000. This is a win. This is the W he was waiting for. His stated intent was to close his position and reinvest the $100,000 into blue chips and dividend stocks. If only the story ended there, with the whiny prick getting a serious gut check and walking away from this debacle a reformed man. But alas, This is Wall Street Bets. Josh's pride and delusions of being a gift to the world pushed him to cite a technicality that he only promised to donate $10K to autism if he exercised his puts. Since he sold the puts instead of exercising, he declared the arrangement void, thereby acting like a complete scumbag lawyer. This is ironic because in the previous sentence, he declared his actual lawyer a scumbag for telling him that he needs to collect more information before suing Robinhood. But karma has a way of biting back. While he pledged to stop buying options, he elected to perform equally degenerate trades with other strategies. With his $100K gain and around $90,000 left over from his original position, Josh decided to place an after-hours market order on shares of PacWest Bancorp, which is also nearly bankrupt. Placing an after-hours market order is a sure way to get a bad fill, and Josh nearly blew a gasket when he realized he got filled at 17.7% above the bid for an immediate $41,000 loss. Again, he blamed Robinhood. Disturbed but not broken, Josh performed DD on First Horizon, another struggling bank. The CEO of TD had expressed intent to buy out First Horizon, and therefore Josh concluded that this arrangement was a done deal. First Horizon, ticker FHN, was a buy. He went in with $100K, which is the remainder of his gains from the FRC trade, plus $40K from his original coffers, and bought over 7,000 shares at about $15.70 each. 8 hours later, TD pulled out of the deal and First Horizon was back on its own. Shares tanked almost 50% immediately, and Josh closed out another $53,000 loss. On Cinco de Mayo, as Americans celebrated Mexican independence on the wrong day by visiting Taco Bell and Chipotle, Josh posted an unusual moment of clarity. He admitted that he was struggling from gambling addiction and was determined to win back his losses, which is kind of a symptom of gambling addiction. To do so, he decided to stop gambling with risky shares of banks on the verge of bankruptcy and instead sell put options on banks that are on the verge of bankruptcy. His weapon of choice? Western Alliance Bancorp. With the stock trading at $20, he determined that selling puts at the $12 strike for heavy premium was a worthwhile risk. If the options expired worthless, he'd recover back to his post-FRC value. In a trade that must have required an additional deposit, the addict sold 279 puts on Western Alliance at the $12 and $13 strikes for $100K in premium collected. Finally, the nightmare was over, he said. He would be indemnified and didn't even owe the Autist Society $10K, according to him anyway. The degenerates manhandled him for his dishonesty. We love reckless trading. The tragic hero arc is one that we treasure time and time again. Sometimes it's admirable to trade with impunity, almost defiantly. But that's not what this is. Josh was sliced apart with insults that bore deep, permabans. The man reaped what he sowed. But as for his final YOLO, did he succeed? Well, according to the man himself, he was banned and shamed, and lost more money still until he stood homeless and barefoot, a disgraced gambling addict. Technically, this is possible. WAL did briefly tank on May 4th, so if he opened the position just prior and then closed at the bottom, he would have been cucked. But Josh's clarity post was from May 5th. Surely if he traded that poorly, he would have mentioned it. I think Josh's redemption trade on Western Alliance did go according to plan, and if he's still holding, he's up about 84K. But Josh has since gone silent, only commenting on popular yet irrelevant subs like idiots in cars like a normie. Josh, if you did indeed recover your losses, I call upon you to fulfill your pledge. Donate $10,000 to the Autism Society, lest you remain cursed, permabanned, and a worthless creature unworthy of eating ramen noodles off the bottom of my boots. Regardless of how your story ends, one thing is for certain: you will never be forgotten. Although I am not enthusiastic about doing so, I offer you the crown of degeneracy.
Who wants to be king?
I hope to catch you guys on our free Discord, and check out the other series on my channel, like the 3K Challenge and the Freeloader Challenge, where you actually make money. And don't forget to subscribe so you don't miss the next Dank Trades video. Thanks for watching.